Well, hello and welcome to another episode of the Legal Gym podcast. Thank you so much for joining me today. Today, we're going to be talking about everybody's favorite topic, and that is how to pay yourself if you have an LLC. Now, for the show notes for today's episode, which will include all of the links and resources for everything that I'm going to be talking about today, make sure you head on over to hawthornelaw.net/getpaid. That's hawthornelaw.net/get-paid. All right, let's dive in. Now, I will tell you, when I first got started with my own online business, paying myself was like this super scary idea. I wasn't sure how to do it. I wasn't sure how to make sure all the taxes got taken out correctly. I wasn't sure if I could pay myself or how that was going to work. And this, not surprisingly, is one of the most common questions I get from entrepreneurs on our legal strategy calls, is how to make sure they pay themselves correctly. So today, I really want to just dive into how this works. It's not as scary as you would think. It's actually fairly simple. And so I want to make sure you're doing it properly. Now, I think we need to break this down in terms of whether you are an S corporation or whether you're not an S corporation. Now, for most people, when you're just getting started, you're not going to be an S corporation. And so when you receive revenue into your business, then theoretically you can take that money and you can deposit it into your personal checking account, and that's how you pay yourself. It's that simple. Now, the question becomes, how much should you pay yourself? That's really the more important issue here, because you need to make sure your LLC is properly capitalized. That's one of the areas where you can get into trouble, and the corporate veil can actually be pierced if you don't have enough money in your LLC bank account. So you always want to make sure your LLC is properly capitalized. Am I saying that right? Is properly capitalized. Yeah. I don't know why I thought I was wrong on that, but that's the way it works. So, but even more so than that, you need to make sure you have money in your LLC operating agreement to pay bills, to pay vendors, to pay for marketing, to do different things like that. So the question becomes, how much should you actually pay yourself? Now, I personally follow the Profit First system, and let me just give you a rundown of this, what the Profit First system is. This is a system that was developed by Mike Michalowicz. He's got a book. It's called Profit First. I'll include a link to that in the show notes page. Make sure you read it. It's a great book. It really, I will say, transformed and revolutionized the way I got paid in my business. So this is super important. So the way this works, if you receive, let's say you get $100 into your business, then twice a month, you're going to want to, I would say some people do it twice a month. Personally, I do it once a month, but you can do it at whatever cadence is appropriate for you. If it be once a week, twice a month, once a month, whatever you want to do. But the general idea is that if you get paid $100 into your business and that's what's sitting in your business bank account, then it's going to be really easy for you to take that money out and pay it to yourself all as a profit distribution. But in reality, you shouldn't be doing that, because you've got bills to pay and you've got taxes to pay and you've got all these things that you need to pay out of your business. So you have to basically create a system of percentages that you're going to use to make sure you're only paying yourself the proper amount. But you also want to make sure you're paying yourself enough. So this does a couple of things. Number one, instead of saying, okay, I got paid $100, then I pay all the tax or pay all the expenses for my business, whatever's left over, that's how much I take as my profit or as my owner pay. By doing it that way, then most people end up not getting paid anything, because their expenses for the business kind of go out of control. They don't hold back any money for taxes. They don't hold back any money to put into savings for themselves. And so really at the end of the day, they're living paycheck to paycheck, quite literally, and sometimes less than paycheck to paycheck on a monthly basis. And so by implementing this Profit First system, it really has helped my firm to start saving money, put money into a profit account, to take a trip or to invest in the business or do whatever I want to do with it. It also, the other big things that happens with a lot of business owners who are just getting started is they forget to save money for taxes. And then when it comes time to pay taxes after their first year in business, they get this huge tax bill and they don't have any money to pay it. And that's also a problem. So there's a number of reasons why you really need to take control of how you're going to pay yourself in your business, and this Profit First system is a great way to do it. So here's how it works. Let's say, again, you get paid that $100 and that's how much you make for the month. Now, hopefully you're making a lot more than $100 a month, but if you were just getting started, just go with it here. You get paid that $100. So we're going to take a certain percentage of that money, and it's usually between, I'd say, 30 to 50%, and you're going to set that aside into an owner pay account. Now, you're going to need, I forgot to mention this, you're going to need 4 different bank accounts to properly implement this system. You're going to need an operating account, which you probably already have. You're going to need an owner's pay account, which is the account that you're going to put your owner pay in. You're going to need a tax account, and you're going to need a profit account. In addition, my recommendation, and this is what I've done, is I would set up a separate tax account, a separate profit account at a different bank that you can transfer money into when you run all these profit first calculations and do all these transfers once or twice or 4 times a month, however often you decide to do that. And the reason for that is it's kind of like that out of sight, out of mind situation where if you take that money and you put it in a separate bank account, you kind of forget it's there and you don't have to worry about accidentally spending it as owner pay or as expenses for your business or anything like that. So this is what you should do. You take 30 to 50% and you're going to deposit that $30 to $50 into the owner pay account. You're going to take a small percentage, usually I would say anywhere from 1 to 5%, and you're going to put it in the profit account. Now, even if it's 1%, that's important because you want to get into the habit of starting to put money into that profit account and seeing that profit account grow each and every month. But you're going to take 1 to 5% and you're going to put that into the profit account. And ideally, over time, that will grow and hopefully you'll get that up to 5 to 10% at some point in the future. You're going to take, roughly 30 to 40%. That's going to stay in the operating account to pay for your expenses for the business. And then you're going to take another, I would say, 10 to 15%, and you're going to put that money into the tax account to pay taxes. And you need to make sure, obviously, all these calculations add up to 100%, however you decide to do it. But what you're going to find when you do this is that your expenses are going to be out of line with the amount of money that you have to pay for your expenses. And that's going to be a good indicator to you that you need to start cutting your expenses. Now, a good way to do this, and what I recommend, and this is what I've done, is I pay all my business expenses with my firm credit card. And so when I first implemented this system, I basically changed the number on that credit card, which immediately cut off any recurring payments. Nothing was going to get charged on that credit card unless I affirmatively went in and updated the credit card. And so this is what I recommend you do. If your expenses are really out of whack and you really want to make sure you get this under control, then you can absolutely change the account number on your credit card so that no more charges are going to get posted to that credit card unless you update that credit card with the vendor that you want to pay. And then you can go through your credit card statement and you can look at one by one at every single expense you're paying in your business and decide whether or not that's something that you actually truly need at this time. And if it is, then you go ahead, you update the credit card with that business. If it's not, then you go and you cancel the service and make sure that they're not going to try and charge your credit card again. And people ask, well, why do you change your credit card? And so the reason I recommend this is because there may be charges that you don't actually see on your credit card. This is a good way to make sure you capture those, and you'll get an email from them. You're very likely going to get an email from some of these vendors saying, hey, you need to update your credit card, and then you can decide whether or not you want to keep that service or you want to cancel that service. And so that's a good way to kind of clear out your transactions, and you need to stick with this. So this is very important. When you're first getting started, you very well might not have enough money to pay all those expenses and pay yourself. And so that's telling you that you need to do something about that, and you need to decide what you truly need to spend money on. So that's how I recommend doing it. So then what you do is you transfer money once a month or whatever your cadence is into that owner pay account, and you take that owner pay, and that's how much you pay yourself. And you just write a check from the owner pay account into your personal bank account, and there, you've gotten paid. So good to go. This is if you're a sole proprietor. If you're an S corporation, then everything is exactly the same. The only difference being that when you go to pay yourself out of that owner pay account, instead of doing it as writing a check to yourself, you're going to run payroll. And there's going to be all these taxes associated with that. And so you'll transfer money from the tax account into the owner pay account to cover the taxes that are going to come with your payroll also, because what you would typically do with the tax account is once a quarter you would make an estimated payment for that. But in this case, you're going to be paying part of that money with the payroll each month. And so you just transfer enough money from the tax account into the owner pay account to cover the tax portion of your payroll, which is usually going to be somewhere in a minimum, it's going to be about 15% of the total pay that you're paying yourself. So if you're paying yourself $100, then you're looking at roughly $15 in taxes that you're going to have to transfer into that account. And that will cover all the withholdings for your paycheck as well as the employer portion of the taxes that you're going to owe. If you don't understand what I'm talking about there, that's okay. Just trust me, set up your payroll through the provider that I recommend and do it that way. And it's the easiest way. And then you can get the money direct deposited into your personal account. You don't even need to worry about writing checks. So there you have it. Now you know more about how to pay yourself and how much to pay yourself if you have an LLC. And so you're ready to go ahead and implement, because like I've said many times before, if there's one thing we love to do over here at the Legal Gym, it's to take massive action. So if you haven't already, make sure you check out the show notes page for today's episode. You'll get a rundown of all the links and resources we talked about here today by visiting hawthornelaw.net/get-paid. That's hawthornelaw.net/get-paid. And that's going to be the home base for all of your legal and business tools and resources to help you start, build, and of course, legally protect your very own online business. Thank you so much for listening today, folks, and I look forward to talking with you in the next episode.